Bank earnings fourth quarter 2023. Updated December 1, 2023. Bank of Nova Scotia. Bank of Nova Scotia reported lower fourth quarter profit that missed analysts' estimates as a jump in loan loss reserves and mounting expenses weighed on the lender's financial results. Scotiabank earned $1.4 billion, or $1.02 per share, in the 3 months that ended October 31, compared with $1.63 per share in the same quarter last year. Adjusted to exclude certain items, the bank said it earned $1.26 per share. That fell below the $1.65 per share analysts expected. The lender also booked more than $590 million in charges as it cuts 3% of its global workforce, trims its real estate premises, and took a write-down of the value of an investment in China-based Bank of Xi'an. The bank has been focused on reining in mounting expenses and building its deposit base as it prepares to unveil its new strategic plan in December under new Chief Executive Officer Scott Thomson. In the quarter, Scotiabank set aside $1.3 billion in provisions for credit losses, the funds bank set aside to cover loans that may default. That was higher than analysts anticipated and included $454 million against loans that are still being repaid. Total revenue rose 9% in the quarter, to $8.3 billion. But expenses surged 22% to $5.5 billion, which the bank said was driven by higher staffing, performance-based compensation and technology costs and taxes. Royal Bank of Canada. Royal Bank of Canada reported higher fourth quarter profit that beat analysts' estimates as a surge capital markets earnings and lower taxes offset climbing loan loss provisions. RBC earned $4.1 billion, or $2.90 per share, in the 3 months that ended October 31. That compared with $3.9 billion, or $2.74 per share, in the same quarter last year. Adjusted to exclude certain items, the bank said it earned $2.78 per share. That edged out the $2.65 per share analysts expected, according to analysts. The bank raised its quarterly dividend to $1.38 per share. In the quarter, RBC set aside $720 million in provisions for credit losses. That was higher than analysts anticipated and included $194 million against loans that are still being repaid, based on models that use economic forecasting to predict future losses. In the same quarter last year, RBC had a set-aside of $381 million in provisions. Total revenue rose 4% in the quarter, to $13 billion, while expenses increased 13% to $8.14 billion. Canadian Imperial Bank of Commerce. CIBC reported higher fiscal fourth quarter profit and raised its dividend as provisions for bad loans were lower than analysts anticipated, and retail banking profits rebounded. CIBC earned $1.48 billion, or $1.53 per share, in the quarter that ended October 31, compared with $1.85 billion, or $1.26 per share, in the same quarter last year. After adjusting for certain items, CIBC said it earned $1.52 billion, or $1.57 per share, ahead of analysts' consensus estimate of $1.55 per share, according to data from the London Stock Exchange Group. CIBC raised its quarterly dividend by 3 cents to 90 cents per share. The Toronto-based bank reported provisions for credit losses of $541 million in the quarter. That was less than analysts expected, and mostly earmarked for loans that are already past due. CIBC earmarked only $63 million against loans that are performing but could go sour in future. Fourth quarter revenue increased 8% year-over-year to $5.8 billion, while expenses were down 1% to $3.4 billion. For the full fiscal year that ended in October, CIBC's revenue increased nearly 7% to $23.3 billion, though adjusted profit dipped slightly to $6.5 billion as expenses increased 12% to $14.3 billion. Toronto Dominion Bank. Toronto Dominion Bank reported lower fourth quarter profit that missed analysts' estimates as the lender booked climbing expenses and lower capital markets earnings. TD earned $2.9 billion, or $1.49 per share, down 57% in the 3 months that ended October 31. Adjusted to exclude certain items, the bank said it earned $1.83 per share. That fell below the $1.91 per share analysts expected, according to analysts. Since terminating its acquisition of Tennessee-based First Horizon Corp., investors are waiting for further details on the expected fines or other penalties stemming from probes by regulators and law enforcement agencies, including the United States Department of Justice, related to its anti-money laundering practices. The lender said Thursday that it does not yet know the outcomes of the inquiries and investigations, but it expects monetary and non-monetary penalties. In the quarter, TD set aside $878 million in provisions for credit losses. That was lower than analysts anticipated and included $159 million against loans that are still being repaid, based on models that use economic forecasting to predict future losses. Total revenue fell 16% in the quarter, to $13.1 billion. But expenses increased 20% to $7.9 billion, which the bank said was driven by higher employee costs, restructuring charges and acquisition-related costs. Bank of Montreal. Bank of Montreal reported lower fourth-quarter profit that missed analysts' estimates as the lender booked higher expenses and loan loss provisions. BMO earned $1.6 billion, or $2.06 per share, in the 3 months that ended October 31. That compared with $4.5 billion, or $6.51 per share, in the same quarter last year. Adjusted to exclude certain items, including costs related to BMO's acquisition of Bank of the West and legal expenses, the bank reported profit of $2.81 per share. That fell below the $2.86 per share analysts expected, according to analysts. The bank raised its quarterly dividend to $1.51 per share. In the quarter, BMO set aside $446 million in provisions for credit losses, the funds bank set aside to cover loans that may default. That was lower than analysts anticipated and included $38 million against loans that are still being repaid, based on models that use economic forecasting to predict future losses. In the same quarter last year, BMO had a set aside of $226 million in provisions. Total revenue in the quarter fell to $8.4 billion from $10.6 billion. Expenses climbed to $5.7 billion from $4.8 billion, which the bank said was driven by acquisition-related costs, including Bank of the West and Air Miles, as well as Salesforce and technology investments. National Bank of Canada. National Bank of Canada reported higher fourth-quarter profit that beat analysts' estimates as capital markets revenue surged, and the lender posted lower-than-expected loan loss provisions. National Bank earned $768 million, or $2.14 per share, in the 3 months that ended October 31. That compared with $738 billion, or $2.08 per share, in the same quarter last year. Adjusted to exclude certain items, the bank said it earned $2.44 per share. That edged out the $2.25 per share analysts expected, according to analysts. The bank raised its quarterly dividend to $1.06 per share. In the quarter, National Bank set aside $115 million in provisions for credit losses, the funds bank set aside to cover loans that may default. That was lower than analysts anticipated and included $52 million against loans that are still being repaid, based on models that use economic forecasting to predict future losses. In the same quarter last year, National Bank had a set aside of $29 million in provisions. Total revenue rose 11% in the quarter, to $2.6 billion. But expenses increased 19% to $1.6 billion, which the bank said was driven higher salary and technology costs. Profit from Canadian personal and small business banking was $288 million, up 14% from a year earlier, driven by higher expenses and provisions for credit losses. The wealth management division generated $155 million of profit, down 20% as costs climbed. And capital markets profits surged 40% to $284 million as higher revenue in global markets and corporate and investment banking offset a decline in mergers and acquisition activity. Gains on trading bank shares. Taking advantage of pullback caused by speculation that Canada will enter a severe recession. Bank of Nova Scotia. November 28th buy at $57.50, November 30th sell at $60. Gain of $2.50 per share. Royal Bank of Canada. November 28th buy at $117, November 30th sell at $122.50. Gain of $5.50 per share. Bank of Montreal. November 28th buy at $108.50. November 30th sell at $113.50. Gain of $5 per share. TD Bank. November 28th buy at $82.50. November 30th sell at $83.50. Gain of 50 cents per share. National Bank of Canada. November 28th buy at $88.50. November 30th sell at $93.50. Gain of $5 per share. Financial Services Index versus the banks. Overall, positive earnings reflect uptrend in stock prices. For more details, go to www.train2invest.com. Thank you.